We've got some updates regarding crypto and Bitcoin taxes, and it's not really looking great. But have no fear, my personal CPA, Scott Martin, is here to explain everything to you so you don't worry. And yes, taxes are a scam, but you still do need to pay them. So, first order of bad news. Trump's big, beautiful bill did not include a crypto or Bitcoin tax exemption. However, it is anticipated that we will get another bill in the future. We do not have a date when that will happen, but fingers crossed it does. However, Cynthia Loomis is still trying to push for that, and I believe that she will continue to push and it will become a reality one day. Second piece of bad news. The U.S. Supreme Court rejects appeal to block IRS from accessing Coinbase user data, allowing the agency to collect on 14,000 plus crypto customers. Again, you guys need to pay your crypto taxes. It's not fun. It's not sexy. I absolutely dislike doing it. But again, they will come after you, and this ruling is proof. And last but not least, the third piece of bearish crypto tax news is a 758% increase reported by CoinLedger is the IRS is sending warning letters to crypto investors. They say that it reflects a strategic escalation in tax enforcement, and this is driven by the IRS's use of advanced data analytics to identify unreported crypto transactions. This also comes from a 2021 study from the National Bureau of Economic Research estimating that approximately 50 billion in annual tax gaps from digital assets. So with the 758% surge in them wanting to collect taxes from you, pay attention to what Scott says. And if you do want to contact him, his website is scottjmartin.com. Take it away, Scott.
Let's talk about the recent surge in IRS letters. Here's what you need to know. The IRS for a few years now has included a box on the 1040 form asking if you possess digital assets. It's easy to miss, though if you use a tax preparer, you should be in compliance. This box isn't just if you had reportable events, but if you owned any crypto assets during the reporting year. Now, this is not definite, but based on the current intel, it is my understanding that the IRS may be sending these letters out if you didn't check the digital asset box but had a 1099 sent to the IRS by your exchange, or vice versa. The letters are broken down into the following designations: 6173 and 6174. You can find the identity of your letter at the bottom right hand side of the letter itself. It appears that the 6174 series of letters are merely informing the taxpayer to ensure that they're being diligent in reporting their digital transactions. The letter 6173 appears to be the one that requires a response, usually within 30 days. The letter 6173 indicates that the IRS feels strongly that you may have missed some reporting requirements, so you'll need to respond within the deadline period or request an extension. Just don't ignore it, as it frequently can escalate the situation. How's this going to affect you? It's not a concern if you haven't received one, obviously. It's also not a huge concern if you've received the 6174 series of letters, as they're basically just stating that the IRS knows that you're holding digital assets and to stay on top of your reporting. The 6173 is the one you'll not want to ignore. Most digital holders of crypto assets have not received any of these form letters yet. This appears to be the first showing by the IRS that they're taking digital asset ownership and trading seriously, and it probably won't be the last. We'll keep you posted.